Hello everyone and welcome to this lesson in the Meme Coin Trading School. So in this lesson we're just going to go over a key concept called support and resistance, and this is very good for you to track the market, find good points for entry, find places where the market's rejecting, and good place for a sellout. So support and resistance, pretty much in short, is a place where the market usually bounces off. Support is a place where the market bounces off and it signals good buying pressure or a good base where the coin, if it breaks through that point, that means that it can probably sink through. Resistance is a point in the market where there's strong selling pressure, and that means that it's a good point to exit, and if it does break through it may go for a bull run. And there are two other concepts I'll teach you, which is change of character and a break of structure, because this is involved in the meme coin trading strategy. So support, let's find a support. We're on a random coin right here. This is a 6 hour coin, has good market thing. So let's see, a support would be, this would be a base support right here. The market is bouncing off this point, and obviously you can use this with a Fibonacci retracement as well. So if you drag it here, you can see there are key points in the market where the market bounces off. You can see that it's holding around the 0.382 level. So what we would do is, that is a key zone we would find for, and there's good buy pressure. So we'd make our ground support right here. It bounced off multiple times. This shows that the market isn't really trying to push down through this point, and since it went multiple times, you'd probably enter a buy order just here. Since usually I look for something if it goes once or twice, and if it hits a third time I'd go for an entry because it's a good base if it is lining up with other indicators and other analysis that I've gone over in the previous videos. So it's not only just a straight line, you can also have support going diagonal. So you can see it's lining up diagonally. Let me just remove these baseline right there. You can see it's lining up diagonally. This can be your long-term support holding from the previous, and you can see it's keeping this strong momentum and bouncing off, respecting. When price is respecting the long-term support, it does mean that it is on a healthy increase and steady. And then you can see right here as well, price is on a nice support from here, just like that. There we go. It broke through again. As you can see, as soon as price breaks the support, it usually sinks very low. You can see over here it sank to the bottom, but it started to get oversold, and people found this as a point for an entry. You can see this would actually be a support zone itself, just like that. There we go. Yeah, it was holding at this point before consolidation, and it was oversold, so we thought, okay, good point for an entry, just like that, and you could sell for a small little profit of 0.8x. So what is resistance now? So let's find a point for resistance. Let's see, resistance would be something like right here. The market is struggling to push past this level just here, even though it wicked out. This is a wick, by the way, as we've told you in the previous lesson in price action. Price wicked out, it wasn't actually able to push, and it rejected hard off this. Resistance is a good point for either an exit or a key level where you want price to push through. If there's good buy volume, there is a high chance that it should be able to push through. You can also see resistance from the top, just like this. If the price is starting to decline, there we go. You can draw a long-term or short-term resistance diagonally as well, just like a support. Now let's go on to key things like change of character and break of structure. So if you guys want to write this down, change of character, okay, let's start with break of structure. Break of structure is let's say right here you have the market, you have the high and you have the low, just there from the move. So you have the high, let me just zoom in really quick, let's make a highlight. So you have the high and then you have the low right there after a little move. So what happened was it's consolidating, and it wasn't going either higher or lower. So what that means is, since it is consolidating in that small pattern, it's also formed a pennant, triangle pennant right there, making it go down, bearish pennant. So what it is saying is, if it breaches, let us make a ray really quick, if it breaches the high, it is a good chance that the market will push up. If it breaches low right here, it is a good chance the market will break down. Since it broke structure here, even if it goes a bit high, it is likely to go on a bearish trend. So you can see again where there'll be a break of structure, we have the move here, this is the low, and then this is the high, there we go. And you can see it broke structure right here and it went on a bullish momentum all the way to the top. So that is pretty much what break of structure is. If the price breaches the highest point in the recent move that you're looking at, or the lowest point is bearish, the highest point is bullish. Now what is change of character? So change of character, there's two characters, bullish and bearish. Change of character is when the market stops making high highs or high lows. So let's say from a bullish to a bearish, it stops making high highs. You can see high highs, high highs, high highs, high highs, and instead of making a high high, it made a higher low. There we go, just there. So it was high highs, high highs, high highs, and higher low. There we go. That is a change of character just there. And from that point, you can see that the market started to go bearish. But again, the character changed from high lows to a higher high. It broke the character just there, about there, you would say. There we go. So it broke the character right there, and that changed our momentum to a bullish momentum. Instead of making higher lows, it made a higher high, and this is the last high. So you would usually want to look at something here, but this would also be classed as a small short-term change of character. So from that, we would see, okay, this is a good time. It gives confidence in our trade that it should go over to the buy side. So how can we use support and resistance for entries and exits? So what you can do is, like I said, you see a historical support line, just there we go. You can see it's bouncing off. Around here you'd find an entry. You can see the doji candle, and it came back down, and it showed that there could be good bullish momentum. So from that, we said, okay, let's go find an entry, and we would enter just around this level. And you can also do that with a resistance. So if you want a short-term trade, you could just place that right there, and there you go. You would have your little short-term trade. It will be from 10k to 20k. That'd be a simple 2x. That simple trade would be a 2x. If you invest in 100, you'd get a return of 200. That is how you'd find a good entry and a good exit using support and resistance. And you can see a changed character in the middle, meaning it was bullish momentum. So that is pretty much it for the video. It's nothing too long. It just goes over what support and resistance is. And if you have any questions, just rewatch the video and we can go over it again if needed.